Apple here, the stock hitting a new all-time high for a sixth day in a row. It's now on pace for its best year in a decade. But some are starting to turn sour on the name. We just learned that Warren Buffett's Berkshire Hathaway trimmed its stake in Apple last quarter. And now Chartmaster says it is time to sell this stock. So why don't you go over to the plasma and break it down for us?
Sure. I mean, so as distinct from Google, think about Google. Google's the same price it was 18 months ago, which means that's the opportunity, has yet to really break out. Apple broke out, and to some extent, you have exploitation of potential, and it's quite steep and uncorrected. A few charts, in fact, only 3. Let's just look at it. This is the 150-day moving average over the past 2 years. And what we know is you could say, well, so what? It gets above or below, but let's pull this back and look out over a bit longer time frame. This is the same chart, and it's looking at where the stock is above or below the 150-day moving average. Now let's pull it back even further and look at a 2-panel chart. What the top is doing is looking at the same circumstance, the current stock in relation to the 150-day moving average, and the bottom panel is calculating for us automatically instead of having to wonder, well, just how far above the line is it? And what you see here, and this is quite something, every single time that Apple has traded 24% above its 150-day moving average, it has peaked and rolled over. That's happened literally simultaneously every time for the past 7 years. At this point, as opposed to something that has potential to break out, Google has already broken out, and what comes to mind is trimming, taking profits, writing calls, doing something before, as they say, someone does it for you.
Before someone does it for you.
I mean,
Carter, come on back. I was just out of curiosity looking at the ratings on Wall Street. Not that we put a lot of stock into that, but 65% are either at a buy or strong buy.
Or a hold. Right, I did the same thing. So I think you have like 27 at buys, 14 at holds,
it's like the highest since
and
a year
7
ago.
at sells.
Since a year ago, before the 20% decline.
Right, and you always get this peak where everyone rushes in to Carter's, I think, his point using the chart. But if you think about it, you have Apple TV Plus, you have iCloud storage, you have music. That's becoming a much bigger part of the story than it was a year ago, 2 years ago, and definitely 3 years ago. So people that own the stock stay the course now more than ever before.
I just think that the point that Carter's making is a totally valid one, however you want to look at it. In relative terms, I'm surprised Carter didn't give his classic correlation or relative to the S&P. You've outperformed the S&P, the entire market, by 35% since June. Since June, 35. I'm going to say it over and over again because that is extraordinary. And that is a reason to say, hey, you could be a relative value player here. I'm long Apple. I sold some upside calls at 260 into year end because I think, call me away. I'll be okay with that. I do think we get into that. Are you an investor or are you a trader in Apple? And I'm an investor ultimately, but I do think you could be tactical.
Pete owns Apple from $2.30.
Not quite, but from the 1990s. So I've owned it for so I've owned this stock for what feels like forever. But there are times where it's a great opportunity. I loved what I heard you, and I know it's options action that's speaking for you, but it's a great opportunity to sell calls against it, right? Now, the only issue is the implied volatilities have come down significantly. So the prices that you used to be able to get just a couple weeks ago are no longer there because we've watched the VIX get to that 12 to 14. Implied volatilities of options across many of these stocks has dropped. So you're not getting what you were getting. Still makes sense to me. It's kind of like Disney yesterday. That big run up that we had in Disney, that big spike that we got just yesterday, I thought that was my final trade yesterday. Sell the upside calls in Disney against the stock because I want to hold it. And I've been selling options against Apple for what seems to be months and months and months, and they work out. The problem is you lose. The negative, I guess, is you have to be able to take a little bit of a loss on it. So if I were you, Tim, I'd actually recommend, hey, man, sell those calls against it. Buy them back if this thing starts moving and gets up and through your strike.
Yeah, well, I'm through right now, and again, I was at 260s, and I we'll see.
But now it doesn't matter.
End of the year.
There's
can
so
I ask
much.
Can I ask a question to a trade school, Mel?
Is it
it's related to Apple.
Okay.
Well, they're talking about volatility. They're talking about upside vol. And I would think when you've had a stock that's rocketed this high, if I'm willing to actually sell a little bit more upside from here, it would be worth more because the stock's got so much momentum going into that.
No, the implied volatilities come out. The implied volatilities generally go out as the stock goes up because people get more and more confident in what they're seeing. When there's not confidence, that's when you see those implied volatilities.
But I'm confident Apple's moving higher, so shouldn't
a lot of people are confident.
How much higher over what time frame? I mean, it's all about that for options time. But one thing you guys are talking about is the analyst community. If you want to be bullish on this, the analyst community is not bullish, right? We know that a hold recommendation on Wall Street is a sell, right? Of all stocks covered, in fact, so let's take 10, 12,000 stocks, only 5% of all stocks get a sell rating over time, because no one wants to put a sell on it, because then management won't speak to you. They won't let you come on the golf
Hold on a second.
junket.
That's not supposed to matter, Carter.
But I'm telling you,
last time I
that's
checked
what,
with the Chinese wall.
But that's how it works, right? So Wall Street is compromised in that sense. Only 5% of all stocks are sells. A hold is a wink, wink, sell. And what we know is basically half the analysts are saying wink, wink, sell, which is hold, and half are saying buy. Interesting, the collective 12 months price target of this stock is 254. That's below where it's trading now. So if you want to be bullish, you'd say, well, guess what?
Right, but that
They're
also
all
factors
cautious.
in a
I
lot
wanna
of
be-
those analysts that, all due respect, have no clue. So there's a lot of in every
Clearly no respect.
I like the all due
But in
respect.
every career and in every path in life, there's only 10% of people who do it really well. So there are $300 price targets.
What percent
and
are
there's
we
a
in?
220. There's a 220. Hopefully we're in the top 10.
Sure.
I hope
Right.
so,
Selling
too.
upside
I'm not
calls.
really
Exactly.
sure.
Exactly.
All right.